WeWork is a great concept. The problem with WeWork is it's overvalued and the underappreciated with respect to the risks of its business model. And I think that's what he was talking about. And yes, there are certainly risks to the commercial real estate market as a result. But I think there's a bigger issue here. I think the question we need to ask ourselves is WeWork just the tip of the iceberg? Because when you have an 80% gap between where WeWork is priced in the private markets and the public markets, does that call into question the valuation of all these other unicorns, all these other private technology companies? And then does that then have a flow-on effect into the real economy in terms of investment, spending, and growth that then could lead to some kind of unraveling of this cycle?
All right, so this is interesting you bring this up because, Steve, I mean, this idea is something that Rosengren stated specifically, this idea that Fed policy, ultra-low interest rates, the hunt for yield, causing an environment where people bid up the price of assets is what's leading to these bubble-type environments. So is Scott correct? Are there other parts of the economy that are bubblicious because of this?
We need to make a distinction with what Scott's saying. And Scott, the Fed does not care that much if equity investors in WeWork lose money. They can pretty much lose all of their money, and the Fed would not necessarily care unless there's a macro impact or there's a systemic impact in the banking system. The real concern here is this idea that, and I think it was up on Scott's screen, that these tenants they're marginal, they're startups. 80% don't make it.
And by the way, guys, that means the credit risk. There's credit risk being absorbed by these landlords.
Those two words, credit risk. Okay, so let's follow the chain through that Rosengren has set out without obviously my endorsing it. You have a downturn. The small firms go out of business. The landlords are holding the bag for that. And through the SPE, the special purpose entity, they only have very limited recourse back to WeWork parent. So the landlord holds the bag. The landlord can't pay the rent. The bank loan goes under. The bank loan goes under. All of a sudden, you have a systemic problem that causes, by the way, bank lending to go back. That's the cascade of things that Rosengren is concerned about in this environment.
All right, Scott, this is interesting because you may know that CNBC just had a very big investor conference in New York City, delivering alpha. And Steve, I know you were there, but one of the things that happened was we polled the audience of investors at this Delivering Alpha conference about whether or not we talked about WeWork specifically. We said, is there a situation where you would buy, sell, or hold it? The vast majority of participants in this survey, like 3/4 of them, said that they would sell this We Company IPO. Does that speak then, Scott, to this valuation dilemma that we're having overall with these particular types of companies?
Absolutely it does, and it's why they couldn't get their IPO off even at $12 billion. And the bigger problem is they are burning through $2 billion a year in terms of expansion capital, and they've got $2 billion on hand. So this issue hasn't gone away. And I completely understand that there's ramifications for the real estate market. I do not believe they are systemic, however, and let me tell you why. Number one, the amount of supply that's being delivered to the market at this point in the cycle is running at about 50% to 60% of historical averages. Supply has been muted this cycle primarily because of the global financial crisis and bank aversion to lending to developers. And the second issue pertains to leverage. The leverage in the system as it relates to commercial real estate is very, very low, about 30% of debt to assets compared to 50 to 60% prior to the last crisis. Now, I'm not pretending every real estate investor woke up smarter yesterday and started to structure their balance sheets differently. In fact, what happened was the global financial crisis has installed a discipline on the market which really should stop a systemic issue occurring if a company like WeWork falls over.
Scott,
and again, I think the bigger issue is for the broader economy from what's happening to WeWork right
It's an interesting thing you say, and I have no reason to doubt what you're saying. The question becomes, why aren't the landlords enforcing some form of market discipline here? And you get right back to the reach for yield. It's the landlords in this case that are reaching for yield. And by the way, the investors who are fueling the landlords and the purchase of these properties. And so the idea being that it's the Fed that's creating the risk and has to somehow figure out a way. I will say other Fed officials have noted other industries in the past. Biomed was one, I think that was biopharmaceutical mentioned by Yellen. Greenspan's famous irrational exuberance comment. It doesn't necessarily lead to any action.
Right.
Fed thinks somehow by jawboning this industry, saying we're watching this, that they can maybe enforce some discipline that way.